All right, and here we are. This is the Working Title Show with Zach Sams, and we are back. Here we are. This is the Working Title Show with Zach Sams. It is good to be back, and we have a great show and a great guest today. Actually, a guest that is returning, so I'm really excited about that, to catch up with him. David, thanks for being here, man.
It's good to be back. Thanks for having me.
Lots changed, or lots been going on with you since you were on last.
You could say that.
Yeah.
Made some progress.
So remind everybody the name of your company and what you're doing.
Reap Capital. Yeah, so I'm founder and CEO of Reap Capital, based here in Dallas, actually in this very building.
Yeah. And, long commute.
Yeah. So we're value add investors. Our specific focus is multifamily. So our whole portfolio is here in Dallas at this point.
It's really cool, and y'all been pretty active since last time you were on a couple years ago. So. This morning I was at a kind of a men's Bible study thing, and it was made up of multifamily guys. Actually, I'll talk to you about that after the show. But kind of the sentiment there was, it's been a tougher year in multifamily. Real estate as a whole, it's been a little bit tougher year, right? I mean, the fabulous Fed, has done so much for us to help us out, and with that being said, your story is a little bit different. I read that great article about you on The Real Deal the other day. If you haven't seen that, check out that article on The Real Deal. It's really it's a good article, and it was a good read. But you've been bucking the trend a little bit versus what some people have been experiencing. But before we get to that, you have a good background. You're a veteran, and you've been doing this. What year are you in? Year 3, year 4?
Of full-time real estate.
Oh, how about since you bought your first deal?
Well, first real estate investment was 2013, single-family home, but we didn't get into multifamily until 2018.
2018. So kind of give us a little brief history on buying your. What brought you to multifamily, how you did your first deal. Because some people listen to this, they might be thinking, how'd you do that? How'd you get into doing that? What does that look like? So tell us a little bit about how you bought that first deal and how you got to where you are now.
Yeah, so after that first single family home, I'd always, before that, been drawn to real estate. So once that went well, the next question was how to scale. And, I was kind of drawn to the economies of scale inherent with multifamily, so that's what I decided, just go after that 6-unit property. And then
where was that?
I was in Tampa.
Florida.
Tampa, Florida, yep.
So why Tampa, Florida? Were you living there?
That's another good question. Barrier to entry I found was lower.
Really?
So I probably spent 6 months making offers here in Dallas, trying to win a deal, but even back then in 2018, hard earnest money was very prevalent. You really couldn't win anything without it. Not
like hard day one.
Oh yeah.
Wow.
Yeah. So not being experienced in the business, I wasn't prepared to risk that money at that time. So I started to look in other metros with the same kind of growth fundamentals and metrics, but a little bit lower barrier to entry, and that led me to Tampa and Phoenix, which was where I bought my first 2 multifamily deals.
That's interesting. When I think about Tampa, it doesn't really, it doesn't seem like, well, that's similar to Dallas. Maybe that's just because it's on the coast, But what makes Tampa similar? Just is it the demographic profile?
Migration, lots of migration, just like here in Dallas and Texas in general. Yeah.
Were the price points the same there, or they're a little different?
I think their price per unit is probably higher than here, if I'm recalling, but a lot has to do with that. I think property taxes are quite a bit less than here in Dallas, but now, insurance in any coastal area has gone through the roof, so that may not be true anymore. I don't know.
For sure. And so you bought one in Phoenix as well.
Yep. Yeah, a couple of months later, after that deal went well, that one kind of fell in my lap, and we had a ton of interest from friends and family. After we bought that first one, no one had really heard or contemplated doing that kind of investing, you know. And, you know, we didn't have a background in it, so we were just kind of figuring it out.
How long did you own the Tampa deal?
Right at 5 years, a
Okay,
little
yeah.
before, little under 5 years.
It's a good cash flowing property, sounds like.
Yeah,
Yeah.
it was a decent deal. That deal was before we kind of figured out the value add, like business plan, you know, forest appreciation. We were just kind of cash flowing.
So you just kind of bought it and
Hold,
collected
yeah.
rent and
Yeah, we did. There were 2 units that needed to be renovated, so we did do that and bumped rents up a little bit. But, you know, we didn't go in with high leverage debt and like big CapEx budgets and that sort of thing.
right.
Yeah.
And what about the Phoenix deal? Similar?
It was, yeah, that's really how we figured out the value add business plan strategy. You know, we went in with bridge debt, which included CapEx, and went in with a business plan to renovate and get out. And so I think we owned that 16 or 19 months. I forget. Yeah, it was pretty quick. So we sold that thing.
But Phoenix was growing like crazy then too.
Yeah,
So
in hindsight, we probably should have held on to it for a year or 2, but we made some-
hindsight's always so clear.
Yeah.
Yeah.
Yeah, we did well on that one. So it's another good deal.
So after Phoenix, you got more into the Dallas area?
Yeah. First buy was actually North Dallas, Caddo Mills area, storage facility. So we done one storage deal. That was up there. Great result. I mean, it was actually our best investment to date.
You said that was a storage deal? Oh, so you didn't even, that wasn't even a multi-deal.
No. Yeah. So
Was it was just that was a good enough deal you didn't want to pass up kind of scenario?
yeah. It was, you know, all the things you want to see, like not being run at all. You know, it was just like one old guy that owned it.
Yeah.
And it paid the mortgage, so that's all he really cared about. He didn't really have any property management. It didn't show up on Google. You know, no online footprint, digital footprint,
It's like
nothing.
the perfect deal.
No automation. Yeah.
Seems like all the storage deals started out by one old guy owning them.
And it was
so different
It
now.
was 16% occupied when we bought it.
Wow.
Yeah. So
Okay. Yeah, that sounds
lots of value to be added. Yeah.
very interesting. Have you done another storage deal since then?
No, after that, I felt like storage pricing got as aggressive, like they were trading around same cap rates as multi. So I thought, you know, what's the point?
Right.
I think at least now multifamily is way more resilient than storage in
Storage
the
is-
face of a recession, you know. So
Right.
I don't think it's a bad investment, but we just decided to focus on one thing,
Yeah.
especially integrating with property management and all that, you know.
So, well, first, before you keep going, take me back. So you bought a single family home in 2013, right?
Yep.
And then in 2018, you made the decision that multi
Yep.
was where it at. So walk us through like why, you know, for the people that don't know, like
Yep.
why is, because a lot of people, when they think about investing in real estate, that's where they go. They're like,
Yeah.
I'm going to rent, you know, because they know homes. They live in a home. Like, well, I'm going to buy another one and rent it.
Yep.
So why is a multifamily better than single family in your world?
So like I touched on, economies of scale. You know, you buy one single family home and you have a vacancy, you're
empty.
Yeah,
100%.
100%. Yeah.
Yeah.
So, you know, that 6-unit multifamily property, you have one vacancy. I can't do the math in my head, but it's not 100%, you know.
Yeah, and you might not, and you might still cash flow having just
Yeah,
one
exactly.
unit empty,
Yeah.
right?
And you could do the same thing, have 6 homes, just like a multifamily, 6 units, but then 6 individual transactions, 6 different insurance policies, 6 different roofs to worry about,
And they could be spread
and
out.
proximity.
Yeah.
Yeah. So, just the bigger asset you have, kind of under one roof, the easier it is to manage too.
Right. So it was just kind of a discovery
Yeah.
situation there.
Yeah.
Well, what were you doing in 2013 if you weren't full-time real estate at that time?
I was a firefighter, so I just
Really?
I got out of the Marine Corps, did all the training to be a firefighter, landed that first full-time job, and I think 2 months later I was buying a house. So that's goes to show like how drawn to real estate I was, and just
Right.
I mean, 2013, yeah, different
Sure.
environment than it is now, but I had always been against renting. I just felt like you were paying down someone else's mortgage, you know, might as well be paying down mine. So
Sure.
And I was also leveraging a VA loan, so that made it easier. Zero down, good rates. So that was really my plan. Just kind of slowly build a rental portfolio
Yeah.
because you only had to live in it for a year. So live in it a year, rent it out after that, buy the next one with a VA loan, just rinse and repeat until I had a portfolio. And then, so really how I got to that first 6 unit.
And interest rates in 2013 were really good for a zero down type of scenario
yeah,
too.
they're
I would
low.
think.
Yeah, and I think it was in the threes, something 3.25 probably. I had the chance to go work overseas, make some good money, which enabled me to I funded 57% of the down payment for that 6 unit. So it was me and three partners, three friends,
Yeah. That's
So that
cool.
was not a true syndication. It was more of a joint venture between, the four of us. But, that's how I made it work. People figure out other ways, but it worked for me.
That's interesting. So, when did you get in the Marine Corps?
07 to 11, so I joined right out of high school.
Okay, that's really cool. And what was your role? What was your job in the Marine Corps? Were you a firefighter there?
No, infantry, so
Infantry?
specifically a mortarman, which I remember going in, it was like, like going through the school of infantry, they teach you all these different specialties in the
Yeah.
Marine Corps. It's like, who would want to be a mortarman? It sounds lame, But they kind of educated us like, we don't really shoot mortars these days, so you really get to do a little bit of everything. Shoot machine guns, blow stuff up, be a rifleman. So I was like, shoot, sign me up.
All the fun stuff.
Yeah, turned out to be the case, so it was a good job.
That's cool. I was in the National Guard, and I don't know if there's any. I was talking to a guy at lunch. I don't think there's anything more cool than shooting a 50 cal machine gun.
Yeah.
It's fun. Everybody should do it.
Yeah.
So sign up. Okay, so you get out of the Marine Corps, you buy the first home. Where were you a firefighter, by the way? In here in the Metroplex?
Greenville, Texas.
In Greenville, Texas.
Yeah.
Okay. Greenville's really growing right now.
Oh, yeah.
Actually, I've got a client doing a huge development out there. I should introduce you. Okay, so then you get into the multi-side. You do the Tampa deal, the Phoenix deal, and then you get into Dallas. Well, you did the storage deal and decided, okay, I like multifamily better. So take us from there to, let's go to 22 before the rates drop, because that's when I really think your story is very cool.
Yeah. So
The whole story's cool. Don't get me wrong.
22. What did we buy in 22? I guess it was the property that we were supposed to close on the sale today. It's getting pushed to tomorrow. So we bought that property right at the beginning of 22.
You said it was 86 units?
Yeah, 86 units in Grand Prairie, and February. So the next month is when they raise rates for the first time,
Good timing.
and it goes up 5%. Gosh, so so at this point we've owned it 22 months. We're still going to make a little bit of money, but
Was that fixed rate or is that
no,
floating
that's
down?
floating too.
Yeah.
So we're selling because our interest rate cap has to be renewed this coming February.
Yeah.
Which we have the money escrow to do, but then that only gives us a year, and I just don't like.
Don't wanna play that
At
game.
this point, we're trying to hedge our risk. So
Right.
we have the opportunity to sell, make a little bit of money, and live to fight another day. So that's what we're doing. But I think we were able to do that because we did carry out the business plan. I think we increased rents across the board. Like in-place rents are almost $300 more than takeover. So we executed at least. But yeah, it's been a decent deal. Some operational challenges along the way, but
Yeah.
in this market, it'll be a huge win to exit like that.
Well, you told me you've done 10 deals, in total now. So one of the things that struck me in the article on the Real Deal was, the IRRs you've generated. I mean, you've done really well for your investors.
Yeah.
Really well. How have you been able to navigate through, this more troubling time where so many are, it seems like you got some secret sauce, and you don't have to give all your secret sauce away, by the way.
Maybe. I mean, I think we do a good job underwriting and changing assumptions to match the market that we're in. But like when we bought that deal in February, no one knew interest rates were about to go up 5%,
Right.
So I think not really a secret sauce. I think we were just really lucky that we scaled responsibly, we grew responsibly.
Yeah.
So, we're closing on our 10th deal next week, where, there's some other groups founded in 2018 that, they may have done 50, 100 deals. So
Yeah.
I think it was just a matter of, we grew responsibly and didn't get too out over our skis. We were able to grow our infrastructure to support operations.
Yeah.
So I really just chalk it up to that. And
Yeah. Well,
most
true.
of that
Like
was
if you
probably
bought
just luck.
5 deals from the last quarter 21 through first quarter 22, that'd be a lot to churn through right now on floating rate for sure.
Yeah.
That'd probably keep you up at night a little bit, I would think.
Yeah.
So, I was talking to some folks today, and I'm sure people have heard interest rates have ticked down a little bit, and that's good news. But when you put your finger on the pulse of the multifamily market, what excites you, going forward, and where do you and what worries you? What keeps you up at night about it?
I don't know if it keeps me up at night, but I think the amount of money that we've pumped into the economy, there's got to be a correction. Since the creation of debt, there's always been periods of expansion and contraction.
Yeah.
So I don't really think we've seen the contraction yet. So if I was worried about something, that would be it, and like what that's going to look like. But multifamily, I mean, long-term fundamentals are great.
Right.
Our population's still growing nationwide, ton of people coming here.
Texas is a good spot to be in
Yeah,
right
and then
now.
Texas is one of the best states out of the union, so.
Yeah. Well, despite the economy, it hasn't slowed people from coming here.
Yeah, exactly, yeah. So my outlook is good. I mean, that's reassuring,
With the interest rates going up, it's made it harder for people to buy homes that maybe wanted to.
Yeah.
Do you think that has to play in
It has
as a
an effect.
positive in your business?
Yeah, I think the latest numbers, I think it's over maybe close to $1,100 per month is how much more you'd pay to own a home right now versus rent. So that's good for us. I mean, terrible for everybody else that wants to buy a home.
Yeah.
I'm glad it wasn't that way when I was in 2013 buying mine,
Well, I agree with you. I bought my second home in 2013, but same thing. The first home I bought was in 2009, and that was new construction sitting on the ground that was not moving, and we got it at a discount, obviously.
Yeah.
And then we sold in 2013, but sometimes it's just luck and timing, because we did really
100%.
well on that home, and then when we sold the 2013 home in 2016, we did really well on that home, and we've been where we are since then, and now, unless there was some very crazy reason, I mean, I'm not selling our home. We don't have it. We have no
Where would you
reason
go?
to move.
Yeah.
Some people just decide, hey, it's time to get a bigger house, but I think most people that don't have to do that are holding.
Oh, yeah.
Because why would you want to enter the buying market and double or triple, God, even some quadruple your interest rate?
Yeah, especially when you locked in a 3-something% rate.
Yeah, and so that's slowed down the housing activity, and new construction is doing okay because they don't have
One of the
much
few
competition.
things that's moving. Yeah.
Yeah, but that's correlated to there's no seller selling existing.
Yeah, there's
Right.
still demand for all the people moving here.
Yeah, so I mean, I would say that the trend for multi is gonna keep going well for you.
Hope so.
I hope so too. So you said you got a deal that you're closing on here soon. What does that deal look like? Where's that?
288 units in North Arlington. So
Okay, all right. So your first deal was 6, right? How many units was in Phoenix?
16.
16.
Then,
And then
86, 136, 114, kind of bounced around a little
Yes,
bit.
but you're 286.
Slowly
This
scaled
is the
up.
biggest one
Yeah.
so far.
Yeah,
That's
biggest
exciting.
buy, purchase price, and unit count. So
And you
that's
said
good.
where is it?
North Arlington.
North Arlington. Okay. Arlington's a great market.
Yeah.
Yeah. Is this a value add play as well?
It is, yeah, mostly operational.
Okay.
It's pretty distressed deal. Lenders forcing the sale, so we've been looking for something like this all year.
Now, was this on the market, or did you find
It was. It was going to be a fully marketed deal, but we contacted broker pretty soon after it came out, and
Yeah.
they let us know seller would be open to a preemptive offer. We had already bought 2 deals this year, so we had a pretty good track record even this year with how challenging it's been to buy deals.
When did today the seller, when did they buy the property?
I think it's been right around 2 years, so not
Okay,
long.
not too long.
Yeah, so they bought peak of the market,
Yeah.
probably overpaid. But yeah, distressed deal. I mean, they're
Was there a
operating.
plan to value add it?
Yeah,
Have they
yeah.
done any?
They have,
Yeah.
yeah, they have. Maybe not spent the money where it was, the ROI was the greatest,
Right.
but leasing office looks really good.
Well, that's good.
Yeah.
So, one of the things that even before the rates went up, a lot of people in the multifamily space were talking about is like, we value added so much that they're running out of value add plays. Is that accurate or are you? And you just mentioned something interesting. You said the value add was more on the management side or the
So
operation side than the actual, putting, paint and new floors down.
Yeah.
So
That's really, I think, what I would always want to find is operational value add, like a deal that's truly broken. Like
that doesn't actually cost more dollars necessarily, right?
Yeah, you just hopefully bring in good people, good management, and they fix the issue by themselves.
Yeah.
Their expense ratio is 73%. So in our line of work, I mean like our asset class, 50, around 50 would hopefully below 50% would be acceptable.
Right.
So there's a lot to be streamlined and corrected there.
So is this current seller, are they self-managing?
They are, and they're foreign owners.
Okay.
And I mean, anyone that's in property management these days and like through this year will tell you it's just extremely challenging. I mean, it's
sure.
Yeah, that's, if anything keeps me up at night, it's that, having to deal with property management.
Yeah.
And
That's the unsexy part of it.
Yeah, it's tough. And I can only imagine being, out of the country and not having like a lot of corporate staff here.
Yeah.
Yeah, it's just hard.
So when you buy this deal, like you got to bring in people
Yep.
on your management team to manage it. Do you already have those people, or do you have to hire those people?
We've hired them over the past month, probably month or two. So we've got that team ready to go at this point.
Okay, so they're just waiting to go in and get it
One
done.
one was existing that is getting promoted.
Okay.
And new role over there, but the rest will be new hires.
Is it common that when you buy a place to poach a couple of the people that are maybe managing it there, or is that
I'm sure it's
atypical?
common for some, just due to the nature of the deals. Like most of the ones we buy are just run very poorly, so we
Right.
probably wouldn't want to retain any of the staff anyway. We've done it a couple times, but it's never ended like
Too great.
well. They've always left or been fired after that. So
Yeah.
Yeah.
Well, hiring people, I mean, I know from my business in today's market's hard.
oh yeah.
Yeah. So how do y'all navigate through finding good people
It's
to do
tough. Yeah, if we can, I mean, how I approach it, we've got 10 on the corporate team at this point, and most of those people I've known for years.
Okay.
So I'll pull from my network of people that I know and know that can be trusted.
this? Yeah.
And so that's the first place we'll look. If there's other people that are respected and my staff has worked with, that's the first place that we're going to pull from. Other than that, you just have to rely on either a recruiter or
Yeah.
LinkedIn ad or whatever.
Nice.
Yeah.
So there's recruiters that play in that space as well. I would
Yeah.
say. Yeah. Awesome. So how long have you had the management side going?
That was beginning of 22. So
That was a big step.
yeah, very big. And we were only, I think, 216 units at that point, or around there. So it was pretty early to integrate.
Yeah.
But yeah, I mean, it's made me and us on the like REAP Capital side much better operators.
Right.
Yeah, just having
Understanding that.
oh yeah,
side.
just having that like real in-depth kind of behind the curtain view of like what goes on in property management, and it's good being on one team too.
Yeah.
Yeah.
Well, that's really exciting, and no easy task. at all. And
No.
anybody in multifamily I've spoke to that has made that transition, it's a big step. And yeah, so congratulations on that. So what's next after this deal? Y'all got others in the pipe?
We're nothing worth jumping on right
Yeah.
now. That's been the challenge of this year. Like we've underwritten over 240 deals this year.
Wow.
We offered on 6.
All in Dallas?
Yeah.
Wow.
There may have been a few that we looked at in other places, but
Are there other
they would be
markets you're
outliers.
interested in other than DFW?
I mean, Northwest Arkansas is, that's been of interest.
Yeah.
There's been a lot of talk about that, what's going on out there, but
Yeah, I read an article the other day that a lot of Californians are moving to Arkansas as well
Really?
as Texas, which the number wasn't massive, but
yeah.
that's interesting. It's beautiful country up there.
Yeah.
But
It is pretty, but nothing. I mean, we're not looking in other markets seriously. As long as there's deal flow to be had here in Dallas, we're going to continue focusing here. I mean, it's our backyard. We know it well. Everyone on the corporate team's from Dallas, probably grew up here. So yeah.
that's really cool. So, investors,
Yeah.
where are you raising your money from? Are you still on the friends and family side?
Yeah, mostly retail investors. We're on this latest deal. We're using a couple fund-to-fund managers. So, fund managers doing fund-to-fund type structures.
Right.
So that makes things a little bit easier on us. I like having a diverse pool of capital. I don't want to be relying on one single check writer from an institution. I like having options.
Right.
Yeah.
So, I mean, with what y'all are doing, you've got to have more people that are wanting to invest with y'all than ever before, I would think.
Yeah, this deal, by far our biggest raise, and it seems to be going the most smoothly. So
Yeah.
we'll see.
So if investors are looking for y'all or looking for opportunities, how do they find y'all? How do they get in touch?
Our website's probably the first place. I'm pretty active on LinkedIn, so I try to post several times a week and provide some value there. So you can find me on LinkedIn, but website reapcap.com.
Yep.
Yeah, you can schedule a call directly on there.
And Reap, how did I know how, but tell us how you got that name. It's a good story.
I happened to be in Baghdad, Iraq at the time, thinking through names. I wanted something unique, and our call sign was Reaper in the Marine Corps. So I think it was inspired by the call sign, but it's also a play on words. Reap, to gather, gather capital, pull money. That's essentially what we're doing.
I love it. So before we end, so when you were in Baghdad this time, was that time when you were out of the Marine Corps? Were you doing like private contracting at that
that's
point?
when I left the fire department to go make some real money.
Yeah.
And I was doing diplomatic security under the State Department out there.
Okay. Cool. Well, you'll have to tell me some stories about
Yeah.
that
Episode
on
3.
the other side. Yeah. And come back and see us for sure. This has been fun.
I will.
And congratulations on your success.
Thank you.
And it's a great story. And I wish you a lot more.
Thanks, Zach.
And have
Appreciate
a Merry
you having
Christmas.
me.
Yeah.
You too.
Absolutely. All right. Well, that does it for this episode. We'll see you on the other side, or I guess next year. So thank you for being here. This is the Working Title Show with Zach Sings. We'll catch you next time.